For me, finance is what a petrol or fuel is for your car.
Yes.
And the car is your company, of course. So if you don't have the finances right, then the car is not going to run.
Having a good product or having a good idea is not enough, and we all know that there are a lot of other factors that come into the picture, and one of them being finances.
When we see that this company is completely bootstrapped, built from zero, and then a very the journey of them making it, creating this big of an impact is, I feel, truly inspiring. Okay, so Himanshu, today we are going to discuss about financial focus for entrepreneurs. This is a topic that our team suggested us, and even I thought that this is a topic that we should take up on. Basically, what I feel around this topic is why I believe this topic would be valuable is uh, people are going to start off their initiatives of running a business or a startup or uh, a product development or a service agency. And when they start off, these people are going to be like us, maybe nerds, or somebody who is an opportunist, or somebody who thinks that probably a problem solver. And these people are going to start off with the problem solving nature in mind. Eventually they'll keep on focusing on problem solving and the things around it. And what I've observed is a lot of them are not that much financially focused, and that's wherein the challenge of dealing with the finances comes into the picture. For me, finance is what a petrol or fuel is for your car.
Yes.
And the car is your company, of course. So if you don't have the finances right, then the car is not going to run.
Absolutely.
So that's why this topic. First of all, I would want your views on this topic. What do you think about this topic?
I think talking about this is a very important. This would be a very important thing to talk about, especially for new businesses, small businesses, entrepreneurs coming into the picture. A lot of young entrepreneurs coming uh, in today's day and age, which is obviously a very very good thing. But as you said, that most of these entrepreneurs come in with a mindset of solving a problem, with the mindset of creating a business. Some of them have a mindset of they don't want to work for others, they want to work for themselves, the sense of freedom and all of that, which is amazing. A lot of them have really good products as well, but having a good product or having a good idea is not enough, and we all know that there are a lot of other factors that come into the picture, and one of them being finances for any business, any entrepreneur should be the topmost priority, because that is going to either make or break the company. We can look at a lot of big examples, big companies that were at a certain level at one point and suddenly went bankrupt. And the only reason for that is not managing their finances correctly, right? There'll be other things as well, not just that, but still, finances would be a very important thing over there. So, for young entrepreneurs, for new businesses, I think this is a very good topic. And my feeling is we'll probably have a lot of good conversation around this.
Right. So what I feel is when an entrepreneur starts his journey, uh, it is most of the times, like most of the entrepreneurs are at some point are going to bootstrap the journey through. Probably building an initial product or building initial service or doing some trading, whatever they want to do. They would be bootstrapping it to that point. This word bootstrap, when I heard for the first time, actually I was a developer back then, and I did not know that bootstrap is a business term. I thought the bootstrap is like a tech. And then when I heard this bootstrap term for the first time, I thought that, oh, so bootstrap has been there for since a long time, and the tech was named behind the concept of
Yes.
bootstrap. And that is where I really like the concept of bootstrapping. So I have built my business also in bootstrapping. You know it. Uh, when did you hear the bootstrap term for the first time?
For me, it was very similar as well because I come from a development background as well, as you know. And the first time I came across Bootstrap was again in a technical term. And it was exactly the same for me. I did not know that this term comes from business. But later on, I think it was still years ago, I think I asked somebody, and then they told me that a bootstrap is not actually a term that we use in development. It's actually a business term, and this is what it exactly means. And I really like the idea as well. I got the concept behind bootstrap. I understood that. And for businesses, for new entrepreneurs starting things at bootstrap, and now I'm also seeing a lot of entrepreneurs are wanting to keep their business bootstrap, because everybody comes in with a different say goal or a different mindset and a different thought process, and I'm seeing a lot more people are wanting to keep their business bootstrap, to keep it their own for a longer period of time. I think a very good example is in the current scene is Zerodha. I hope I'm saying the name correctly, but they are still completely bootstrap, right? Which is amazing. So, and I think that they have also served as an inspiration for a lot of young entrepreneurs to keep their business bootstrap. And I feel that should be a way to go to start with. Later on, you might need investment and raise money and all of that. That's absolutely fine as well.
Yeah.
But yeah.
I think Slack has also raised their company
Yes.
completely bootstrapped. I think they started off with their self funding. I mean, they had big pockets, not big pockets, like very big pockets, but they had sufficient
Certainly.
pockets. They also raised a bit of from their friends and family. I think I'm not sure what, but surely they bootstrapped it towards a proper billion dollar company, and they're doing great. I feel we all use Slack in our
Yeah.
day to day lives, and when we see that this company is completely bootstrapped, built from zero, and then a very the journey of them making it till make creating this big of an impact is, I feel, truly inspiring. Okay, so Himanshu, what I want us to discuss is development of products and the finances involved in it. Why people first of all develop products, when should you develop a product, and the finances that are involved around it. um, you know that throughout throughout the globe we have more than 600 million entrepreneurs, which is almost half of the size of India,
Yes.
and it's massive. Okay, and in this there are a lot of self-made entrepreneurs, and when we say self-made entrepreneurs, there is a huge chunk which is also gonna go bootstrap. First of all, why develop your own product? Can you put some light on this?
Absolutely. So my feeling on this is that any product is built with the goal of solving a particular problem, right? So there are entrepreneurs who see there is something wrong in the market, or maybe there's a gap in the market, not necessarily always wrong, but there's a gap in the market, or there is something that does not exist at all, and they just came up with the idea, which we can say a very like a it's very hard in today's day and age because almost everything's out there, but still coming up with a very innovative idea that is not being done currently. So all these different things are at the end of the day problems that need solving, and product always ends up being the way to go to solve that problem, right? Because you're bringing in something into the market that is a product that solves a particular problem for somebody. So that is what I feel, why the need of product comes in, or why a product.
What are your views on a product which solves a niche problem but a really burning problem versus a product which solves a mass problem but like a marginal problem?
My feeling is more on solving a niche problem with a very very high value, and this I'm saying from a product success slash scalability slash profitability point of view. That's just my thought. It's not that in the marginal problem for the masses you cannot make money or you cannot be profitable. But those are two completely different sort of ways to go for any entrepreneur. And in my thought, or it's probably just my personal feeling, that solving a problem, a niche problem with a very high value against it, is the way to go, or that creates a bigger impact, gives you a more sense, a bigger sense of, we can say, success, or a validation that you solved something big, you did something big. So that's what I think.
Yeah. So today's topic, as we discussed, is more about finances. Let's discuss about, while developing your own product, where all are you going to be focused with respect to finances. So what I can think of is, the first, of course, being the development of the product cost, which is going to be massive while the product is being developed and reaching to a stage. Uh, Eventually, once you have reached to a stage, there are going to be marketing costs. There are going to be probably branding costs, because you want to reach out to the market with the right message. There are going to be a bit of R&D costs. There are going to be some operational as well as logistical costs involved. And these are the bifurcations that I feel the costs are. Let's discuss a bit on the most ignorant cost, which is the R&D cost. What what I have done in the past, which was not recommended, is I have done a lot of R&D while building a product, or while doing a service, while exploring the markets. And when I realized that I am putting in a lot of money into R&D versus putting in a lot of money into my core business, my mentor told me the 90-10 principle. So he said that 90% of your focus should be on your core business, because that is going to be a bread and butter, and then you scale that up, versus 10% is going to be your focus onto building the R&D and related activities. The reason you invest a bit on R&D activities is because you want to explore in the market what are the new things by which you can deliver the value. I'm sure a lot of companies do it, but if you actually think about a medium scale entrepreneur, or a small scale entrepreneur, or a person who is running a big company but is running in a very traditional way, they don't invest that much in R&D costs. I feel that we should allocate a bit of budget for R&D costs also, because that R&D, the output of that R&D, is going to be used into your core product. So, what are other ways by which a person can manage their other cost, which is their core cost, which is 90% of the cost that we're talking about, which is execution, development in this case, marketing, and other things. So, how do people budget around this?
So that's a very good question to start with, and also can be a very difficult question to answer, because a lot of different people will have different thoughts on this, and there are different ways of doing it as well. But as you very correctly said, that the 90-10 principle is very right. You There should always be 10% of your budgets, or 10% of your efforts going towards R&D, and not more, for obvious reasons, because R&D is very highly dependent on a breakthrough, which might or might not happen. So the uncertainty around that is very high. Hence, 10% would be the right amount of effort or money to put against that. When we talk about the remaining 90%, I think budgeting and having a very clear handle on your forecast is a very important thing. And when I say forecast, it means your the money you are spending on actually doing the activities, the money you're making out of it, which is your margins or whatever, and the, say for example, the sales you have lined up. So, because there are a lot of different things that will come into play. If we take any example of a product that is oriented towards sales, you make something and you sell it, and the sales of it is going to make you money. So you have a very good product, you have a good profit margin on it, but there are no sales, right? So all these things come into the picture when you're forecasting everything. Let it be, you need to have So as I was saying, that forecasting your own resources and your sales and everything is very important. So if we talk about forecasting your own resources, for example, and when you say your own resources is the people you are people that are spending time for you to build your product or build your software or whatever it is. So if you have a certain amount of people, say you have, for example, 10 people in your organization, and all 10 of them are going to work, say, 7 hours a day, and they work for 5 days a week, and that will give you a certain value. Say that is the amount of man hours you actually have that you can spend. And now you need to work out how many man hours do you need to actually deliver the product, and what is the time you have available, and what is the money you'll be putting into it. So because the amount of time that your employees or your team members spend on building that is going to be your money getting spent to pay their wages and everything. And if we take an example, for example, you have 1000 hours that are available in a week, and you have work that needs to be done which is worth 1000 hours, and you have money that can pay for those 1000 hours. So this is a perfect scenario that you have the people, you have the money, and you have the work, and the three of those three things can happen, and your product gets built. But the problem arises when you have the people, you have the work, but you don't have the funds to keep it rolling. Or in some cases, you have the funds, you have the people, but you don't have the work. Like there's nothing left to be done. And in all these cases, you are set for failure, because you'll either run out of work and you won't be producing anything, or in some cases you have the work but you don't have the funds to keep it going. So in all these cases, as I said, you're set towards failure, and it is very important to have these three things work in harmony for you. So budgeting and forecasting, that is very, very important.
Do you know that I read a statistics which said that out of the total failures that are happening in an entrepreneurship journey, 30% are only because of a bad financial budgeting and all that.
Yeah.
And I really like your approach of making a man hour kitty, and you know that you have this much amount of money. Say for example you have like 20 lakh rupees, and that is what your budget is. And then in that budget you have taken into account everybody's wages, and then back calculated how many hours do you have in hand. So your 20 lakh rupees corresponds to say 1000 hours, and now that many hours are going to correspond to how much progress can you make in your product development, marketing and success.
Yes.
And then you'll be able to very easily forecast that, okay, this product success journey is going to take 700 hours, then I have 300 hours worth of money left in my bank account.
Absolutely.
That's cool. But if my product success is going to take 2000 hours and I have only 1000 hours worth of money in my pocket, then I need to raise funds.
Yes. Absolutely.
Or I need to take a loan, or I need to go for a government grant, or I need to do something around it, or I need to do whatever that it takes to get the money to fuel my rest of the 1000 hours.
Yeah.
So thinking of money as your time as well as time as your money is the approach that you have, that you just gave right now, is absolutely mind blowing for me. And there are a lot of people who don't know this calculation. How do you convert money into time and time into money? Yeah. So this is I think great approach that is going to benefit a lot of people, I feel, in their entrepreneurship journey, to forecast. And talking about forecast, do you know Tesla is great at forecasting, and I really like the way they forecasted things. I think 2016, Elon said that they are going to make I think 500,000 cars in 2018. So 2 years ke baad mein, they forecasted that they are going to make 500,000 cars, which they achieved.
Yes.
And 2017 mein they not predicted, that they are going to make 1 million cars in 2020 year, okay, which they did. and the forecasting that they did was purely and purely based on the data that they were getting. It was not an intuition, it was not a very high willed and motivated effort and calculation that they did. It was purely and purely based on the numbers that they were having and the way they managed the whole project. And I really like the way they forecasted. People actually made fun of them. The whole story. Twitter and all, everybody was blowing off, oh, he's just being too optimistic about it, but they did it. And I really like the way the forecasting that they did. Okay, so forecasting is something that we touched upon. I want to understand your thoughts on where all data can be used from your company to fuel your financial decisions.
Yes. So, as you said, and a very great example, the example from Tesla is a very good one in this scenario. And when we talk about using your own data to actually say forecast how things are coming up, because and you already mentioned as well that what the forecasts that were done by Tesla were purely based on data and not a motivational thing that yes, this is what we will achieve in a certain year. And a lot of time that happens, right? Entrepreneurs would want to say by 2020 I want to acquire 2000 customers, right? But if it's not backed by data, it's not possible. And that is the importance of data, basically. If you are making certain not predictions but forecasts, or trying to map out where you're going to be in a certain year or a certain month, you need to see what has happened in the past. How have the things changed? What is new, what did not work, what worked. It's like a we can take an example. I don't know if it's a good or a bad example, but like a baby that grows up. You cannot expect a 1-year-old to do a certain task, but you can expect a 10-year-old to do the same task, right? And in the same way, that growth for the baby has come over those 10 years. And similarly for a company, when the company starts and then the organization, the company is growing, a lot of things are happening. And if you're keeping a track of how everything went in terms of, say, your team's growth, your team's knowledge growth, your growth in your processes, growth in your, say, value of your product, whatever, and taking all of that into account, using that data to see, okay, if all of these things were happening in a certain way, today we are here. If this keeps going in the same way, in a year's time we would be here, and in 2 years time we could be here. And in order to achieve something higher than that, we might have to change something in our current processes and the way we are doing things. Let it be profitability, let it be the value of your product, whatever, the cost of your product. You might need to decrease your cost for certain things, and a lot of that. But everything at the end of the day needs to be backed by previous data. It should not be on intuition, it should not be on gut feel, it should not be on your motivation to do something.
So I feel that just right now I had that click is the difference between prediction and forecasting is data.
Yes, absolutely.
Yeah. Okay. You know what? So I recently started doing this activity to also deeply see, to deeply analyze my financial data, because I am a very truly financially ignorant person. Okay. And that's not my nature to be very aware of my finances. And I have to then force myself consciously to focus on finances all the time. So it's a very conscious thing that I'll be doing. I keep on doing. What I did was I took our financial data, including all the P&L, profit loss, bank statements, invoices, and all that, and I in Excel sheets, of course. And of the past 4 years, I just imported that data into Microsoft BI. And in Microsoft BI, then I had the possibility of looking in terms of charts on by comparing them one by one, like one below another, all 4 years or 5 years that you can do, where all there has been peaks, where all there has been downs, where all the bank account stayed unfluctuated, where did the bank account fluctuate, so that I can predict when I'm going to get in the next year probable sales if everything stays the same. Of course, if everything market changes and there are certain fluctuations, then it might go on off. But otherwise, I saw that there were a couple of patterns in the amount of sales that we were making. The patterns were more or less like, okay, May and June, July, these are the months wherein people are more giving the sales, which means that, oh, the financial year starts in April, and then a lot of approvals happens in April, so that invoices gets cleared in May, June, July, like that. So all that uh, patterns that I can observe once I imported everything into the Microsoft BI. So that is also one of the way by which, if you are not inherently financially well versed, you can just use a couple of tools that are available online and just run through it, run through these tools.
Yeah.
But what I feel is, what you can't forecast or predict is failures. Failures, I feel, are big part of an entrepreneurship journey. And they say that there is no failure, there are always learnings, and that's very, very true. Failure is when you have put your hands down, then only it's failure. Otherwise, when you get back and again uh, go into your journey again by challenging the failures themselves, that's wherein you learn. I also want to understand from you, have you seen any like case studies type of failures, or any near, or anyone that you have seen, or maybe in your life, whatever examples that you feel might be useful for our viewers to listen to?
Yes, so I think there are a lot of failure examples we can talk about: big companies, small companies, medium companies. I'll probably talk about a story that is say personal to me. So there's an agency that I know of. They're into the creative space, making say web applications, websites, and boutique stuff. And the work they produce is very extremely high end, right? So the work is amazing. The production team is top notch. But the company was making huge losses, right? And when I say huge losses, just in absolute huge losses, like the directors or the owners have to put their own money to just keep the company afloat. And anybody outside of this company, sitting outside of the company, would not even think of that company being in a loss. Like, why? They produce every month. We are seeing new work coming out of the agency. Every month we are seeing a new launch, multiple new launches, and great work. They're always busy. So why would a company be in red? Right? They're doing great. And that's what happens with big brands as well, right? There's an amazing brand, everyone buys their products. Why are they in loss? So if I continue talking about my example, um, so they had a production team that was obviously churning out the work, and they have a project management team that runs the projects and manages the projects, timelines, quality, all of that, right? And the project management team consists of 3 people. Out of those, there are 2 project managers who are probably not, say, following any proper processes. Everything is last minute, things are not planned out, basically we can just easily say not doing their jobs enough. But one of the project managers is doing everything, say, fine. And that is, we can just take it as an example. So what ended up happening is, even after churning out so good work, all their projects were extremely, say, over budget, or something that they had costed at 1000 hours, they have spent 1500 hours, which is a 50% budget blowout, right? And when that is happening and everything is mismanaged, even though they're hitting timelines and quality, budgets are never being hit. And that makes for a company, when you look at the monthly revenue, the cash flow is coming in, but when you check the revenue, it's always in negative, because you have spent so much time that you're not getting paid for, right? That's a simple answer. You're not getting paid for that time. And that is how the company was month by month failing, and the owners were putting their own money to keep the company afloat, because at the end of the day you still have to pay the wages and all other bills and whatever you want to say. And that, I feel, was a very shocking thing for me, seeing such a great company doing amazing work but failing at finances. And the answer, or the fix for that was to keep a handle on your finances, right? Because they had no idea of how much budget they have, how much they should be spending. They were just executing work, and doing good work, but just executing work. There was no budget control and all that stuff. And once that started coming into the picture, uh, and budgets were being adhered to, the production team knew what they need to be spending and how much they can spend and how to achieve it. In that, the company automatically started coming into the black and then the green and everything, right? But the moral of the story here is, however good a company is or however good work they're doing, if they don't have a handle on their own finances, of how much work they're doing versus what they're getting paid for and all of that, a company can easily go into failure. And in most of the cases, entrepreneurs don't have a lot of money just sitting out there to put it into their company, right?
Right.
Or they can't just keep raising money, they can't just keep asking for money, and very easily a company could go bankrupt. Because one month, if you don't have wages, enough money to pay your wages, that's it, your team's going to walk out, right? They're not going to sit there and not get paid. And very easily a great company can just vanish within days or within months or whatever. So that is what I feel on failure. That is what an example from my end on failure.
Yeah, very realistic example, as well as very common example that you have given, that people don't have that financial budgeting, and that's why they don't know why it is going in losses. I mean, it's not their fault, but they can't figure it out. Uh, I feel that failures are going to be there due to multiple reasons, not only just finances are going to be one of the failure. In your case, again, you told me that bad management was also one of the reason behind, the core reason behind why it failed. Sometimes I feel that the product or the service that you are giving also fails.
Yes.
Sometimes you also fail uh, in terms of the market. So everything is fine, सब कुछ सही है, and then suddenly the market changes, some regulation changes.
Yeah.
For example, you have built a fintech app, okay, and suddenly RBI comes in and says that, okay, these two things are not allowed from today. Then what? You will start losing a lot of customers because you are not able to do it, right? So there was I know a company who were trying to build a trading automation, stock market trading, semi automation, not complete automation. But then there was, I think, a couple of months back, RBI released some guidelines on it, and then again the whole idea on which they were betting was questioned, and now they are kind of pivoting around it. So I think failures are going to be part of it. I remember this case study of Dyson. So what they say is, over 15 years, Dyson, the founder of the company, experimented more than 5,000 prototypes for its Dyson's vacuum cleaner thing. And after more than 5,000 prototypes, he was able to create that some bagless vacuum cleaner, which was pioneer in its segment. And that's how the Dyson brand eventually got built, and
Yes.
that's how they created their unique propositions and new products and so on and so forth. But I think failure was and has been part of a lot of great brands that you will see today around us, right? um so after the failures, I want to take a bit of time and talk about uh the scaling up. What I feel around scaling up is, so you start off the project, you start off your journey of solving a problem or chasing an opportunity. Then you build a business around it, you sustain that business by focusing financially on it, and then after a couple of years, there comes a point which you call it as plateau, wherein the company stops growing. It's growing, but like marginally. It's not like an exponential growth. You might have come across a lot of companies who are like 10-year-old, 20-year-old, 30-year-old companies, but the growth is marginal. Okay, irrespective if they take any initiatives or not, it's anyway going to grow at that pace. Scaling up, I feel, is a bigger problem than starting the company itself, because you've invested so much in terms of time, effort, people, focus, everything, your life into it. And now the dream that you have got in with is not, it's kind of quite distant. So my take on this is that there are three factors which generally affects the scaling up: cost, price, value. And the equation and the balance of the equation is going to determine how your company is going to scale up. So say for example, tomorrow you start investing heavily on a marketing budget because you want more customers on your product and you want to scale it up. But if cost, price, or budget, any one of these three are going to be not in focus, or are going to be not met. Say, for example, the cost is too high. If the cost of producing something is too high, you're not going to make money. So, no profits. If the price is too high, the revenues are going to go down. So, again, no money. And value is the most important. If you're not going to go give value to the customer, they're not going to come anyway. So these three factors you have to very carefully balance out, so that nothing goes on off, and then plan your scaling strategy is what I have read. Give me your thoughts on this.
So, I mean, what you said is exactly correct. The thing around cost and your price and your the perceived or the value of it. What I feel is any business, a very there's for me the very simple answer would be you can scale if you have profits, right? By reinvesting those profits into your scalability. That's one way to look at it. Now, what happens a lot of the times is a lot of, say, bootstrapped businesses, um, once they are at a stage, the product is out there, they have customers, the customers are using it, so they're getting paid, they're consistently building the product for updates and everything. But the worst thing that can happen to a company or an organization or anybody is coming to the stage of plateau. Because if you know, a plateau would be that it goes up and then it flattens out and then it goes down, or it stays flattened for a long time, but the growth stops. And the consistent growth is very important, and which will directly correlate to your scalability, because as you're growing you'll need to scale. But a very important factor for both of these things are making sure that you have right amount of profits to keep reinvesting those profits as well at the same time to keep your scalability going. But as you said very rightly, that the cost, the price, and the value, these three things need to work in harmony. And the balance needs to be there, because and that is the right formula for it, because you cannot have that your cost is very high and your price is low. You have a very small profit margin, so you won't have anything saved for you to actually fuel in your growth, right? Or fuel in your scalability. Or in some cases, your price is too high, your cost is low, your profit margins are huge, but there are no sales. So there is, again, anyways, no profit or no money coming in or staying in your company. So those three things just need to work in a beautiful harmony, that will slowly and steadily keep fueling your scalability. And then there are always those cases where there's a huge breakthrough or there's something revolutionary that comes out and that instantly fuels in your scalability, because there are huge profits and all of that happens as well. But that is not happening with everybody every day, right? That is, say, 1 in a million, or say 1 in 1,000, whatever scenario. But for the masses, for all the other organization, those three things.
Great. I think good discussions. We discussed how businesses were built, are built. We discussed the bootstrapped way of doing it, as well as we also discussed how and where all costs are gone while building your own product. We also discussed why financial modeling is important, and why finances, of course, the whole episode is on finances. We also discussed, I think, failures, role of data. We also discussed scaling up, and how do you balance scaling up, because that is what we build all the companies for. I think it has the podcast was great. I feel our viewers might have got some value out of it, and even we also got a bit of pointers in our brains. I got a couple of pointers that you just mentioned in my brain, so that I can use it in my in our initiatives. So great, Himanshu, badhiya baat, and that brings us to the end of the podcast. It was great. The financial focus for entrepreneurs. FFFE.
Cool.
Great.